Well, the one big story that we've been consistently tracking is the health of the Indian economy. Now, here's how things are looking at the moment. On a macro level, things are actually looking better. We are seeing that as each quarter passes, growth is actually going up. Inflation has, by and large, generally been under control. Manufacturing has also been up. So those are the good numbers. And big international agencies like the IMF, etc., have also been predicting that India will continue to be the world's largest, fastest growing economy. But here's the problem. What we are seeing in the last few weeks has been a huge surge in fuel prices. So today, currently, the petrol and diesel that you and I are paying for is at a record high. We've never paid this much for driving our cars or our scooters or our motorbikes. So that's one thing. The other thing that's happening is with the rupee. We have seen the rupee depreciate over the last several months. And at the moment, the rupee is at an all-time low against the dollar. And all of this can have a huge spiraling effect, because if the rupee stays where it is or falls further, you could see oil imports becoming more expensive. That in turn could have an inflationary impact as well. It means your vegetables, for instance, could get more expensive. So there are a lot of concerns people have about these two issues in particular as far as the economy is concerned. So we're happy to have with us Rathin Roy, who is a member of the Prime Minister's Economic Advisory Council, to answer some of those questions that we have on these issues. Thank you very much for coming in.
Thank you for having me.
Let me ask you this. What's good right now, honestly, the three good things, and what's bad?
The fiscal deficit is under control. Growth is within the 7 to 8% band, depending on who you believe. It's not below 7 and it's not above 8. And the current account events of the past 2 weeks are stabilizing.
Although that was a matter of concern as well some time ago.
Yes, but that's been managed.
So what's not good right now? What are you worried about?
I am actually not too worried about anything except the consequences of President Trump.
Explain that.
There are destabilizing influences in the global economy arising from a shift in direction that the Americans have taken. So far, the United States was all in favor of free trade, and we had a multilateral system called the WTO, where we negotiated the rules of the game. The United States is now saying that it is not satisfied with the rules of the game. They feel that they're biased against it, and therefore what they're doing is outside the WTO, unilaterally imposing tariffs on different countries. The most important country they're imposing tariffs on is China. And that means Chinese goods become more expensive, but in the short run, it also means the United States begins to grow like an emerging economy. You know, developed economies grow at 2% if they're lucky. Emerging economies like ours or China's grow at 6, 7, 8%. Now the US is growing at 5% plus, which means that the dollar rises vis-a-vis other currencies, and also that the sentiment in the markets becomes there's money to be made in the US. That was, at least in the short run, that's not there before. So the financial systems of the world start taking money out of emerging economies and putting it into the United States. That results in a depreciation in the dollar. It means less money coming to emerging economies and causes difficulties in management for us. So that's what I have as a matter of concern, because if the intensity of that persists, and if other measures are taken to further unilaterally promote US interests, then we will have more fragility in the global economy, and that will not be a good thing for anybody.
So what is the direct impact of that on us, for instance?
The direct impact on that on us is partly the depreciation of the rupee that you're seeing, and also the fact that, you know, it's important for viewers to understand this. These big financial players, they decide how much money to put in two baskets: emerging economies and developed countries, and they have a formula to do that. When developed countries look better, they actually change their formula, and there's less to put in emerging economies and more to put in developed countries. How does that impact India? India is not China, India is not South Korea, India is not any country that is relying on its growth by producing things cheaply for foreigners. We rely on our growth to happen largely by producing things for our own countrymen, which means that we need other people to invest here. So our balance of payments, exports minus imports, therefore tends to be in deficit, and we finance that deficit by attracting foreign direct investment and portfolio investment.
So that's where we could be hit.
That becomes more difficult to get and more expensive to get, and that's my worry. But it's manageable, but that's a worry.
You have expressed just in recent days concern about the depreciation of the rupee as well. If I can quote you here, this is what PTI said, that you said that it's reasonable that the Indian rupee would have depreciated by 4 to 6% annually against the dollar, but the recent depreciation has been outside these parameters.
Correct.
So at what point did you sit up and say, this is too much?
When it crossed 6%, I didn't say, it's too much. I said this is happening.
Or it's a worry.
Not because of stuff that should happen in the normal course. So when you said the rupee has reached its record level of depreciation, the rupee has, with a few exceptions, been at the record level of record low against the dollar every year of my life. So
that's true. That's true.
So when
I remember when it was 40, which was a really long time ago.
It was 45, that was 66. So it always hits a record, because it's actually very important for us that when we export more than we import, then we get financing for our growth, and that financing, when that comes, it means that basically we
but right now we're out of the comfort zone, right, as far as the rupee is concerned.
Well, the comfort zone depends on, most importantly, on controlling volatility. What you don't want is like the performance of the Indian cricket team. You don't want, one day scoring 100, the other day scoring 300. Then, so what you don't want is the rupee depreciating, but depreciating in jerks and starts. That we have managed well. We have to recognize that a combination of the rise in oil prices and the events I just described will mean that the rupee will depreciate by more.
Yeah, so that was my next question.
By the current account
How
deficit.
much more? How much more do you think the rupee will depreciate? I mean, right now we're almost at 73, right?
Yes.
So are we going to hit 80? Are we going to hit?
You will hit 80 one day. The question is when. As long as we run a current account deficit, no. By no means.
75?
Unless again the rather interesting President of the United States does something to shock the world. Within reasonable parameters, no.
So where do you see the rupee, let's say by December, end of December, maybe around 75, 76? I mean, that's bad enough, but it's going to happen.
Do you think it's going to rain on November 15?
So it's hard to predict.
It's a random walk. So where the rupee will be matters in terms of where it is relative to other emerging economy currencies and why it is where it is. So today, if nothing else happens, I expect the rupee to be reasonably stable around these parameters and to keep depreciating, of course, but not depreciate in large measure or dramatically within a short period of time. So the task of macroeconomic management is to make sure that, as we economists say, the depreciation of the rupee is orderly. There is nothing at the moment to indicate that we will not manage that policy challenge with the instruments at our disposal.
So the concern, though, is that right now inflation is under control, but it may not be for very long. If you have high oil prices and the rupee continues to depreciate, how do you keep prices under check, and for how long?
I'm not a communist, so I can't answer questions like how you keep how you keep prices under check. Prices are formed, and they are formed by supply and demand. So let's get into this business of fuel. So what's happened? Fuel prices have gone up. Government has done nothing to moderate that, I believe correctly, and therefore petrol and diesel at the pump are more expensive. Civil aviation fuel is more expensive. So what I'd expect if the markets were working is that the traffic density in Delhi would drop. People would not be traveling as they are doing. I'd expect Bombay-Delhi airfares to go up. People would not be flying as much because fares would be more expensive. But that is not happening. Demand is not responding in response to an increase in price. And therefore,
it doesn't mean it's not hurting people's pockets.
Everything hurts people's pockets, but if they do not respond by reducing their demand for something, then it means they give up consuming something else, and that moderates aggregate inflation. If it doesn't, then the number we have to look for is the consumer price index, which is the overall inflation number on which the Reserve Bank acts when it considers inflation is going up or down. That view is taken every 2 months by the Reserve Bank, and it is in response to that we use the interest rate to moderate inflation.
So let me ask you, is there any scope at all for these fuel prices to reduce? We had this whole debate about state taxes, about central taxes. And there is a fiscal deficit, as you rightly said. Right now, we are within its red lines. But is there any scope for states to reduce prices further? Some states have. Is there scope for more? Is there scope for the centre to do it?
I would be totally against the centre altering its tax policy to react to the current fuel price rise for the reason I mentioned. If the worry is that it will be inflationary, then the appropriate instrument for that is the interest rate, which is managed by the RBI. If the worry is that the rises in the price of petrol and civil aviation fuel are hurting some people, then my personal view is I need to know who those people are. And if they're you or me, then I would not jeopardize my revenue numbers and fiscal deficit numbers. So there's a difference when, for example, a rise in prices affects the price of dal, and then I can see a case for moderation. But if it is us and our fuel tanks, and even two-wheeler owners in this country, remember, Nidhi, are a minority, then taking the public interest in mind, I see absolutely no case for the centre to do it on an all-India basis. But you can't have a cookie-cutter approach. Different states have different circumstances. There are 29 states, and that's 29 different circumstances. So there I can see why a state government would wish to reduce its own
No, so in a way
taxes.
you're saying that if people can afford to drive cars, then they can afford to pay the fuel.
Yes.
But prices have really shot up. I mean,
haven't
we're talking
really
like a
shot up. They've shot
15% rise in Delhi alone this year.
I'd like to see people driving less, then I don't see that. I'd be very worried.
Well, we don't have a choice. People have to get around, get to work, get somewhere.
Well,
maybe people have to compromise on other aspects of their life.
That is what happens when prices rise, and that is what happens when, so that's how supply and demand change. I didn't say it was painless. I'm asking whether the pain points are points in which it is meritorious for the central government to intervene. I don't think so.
Is it a politically cold approach? Can I ask you that? Because these are politically sensitive issues. We're going into an election year. And part of the problem with the debate around the rupee depreciation as well as fuel prices has been that these in the past and even now have become politically very sensitive issues. So how does the government deal with that?
I don't know. I'm not a politician, but I can tell you this. I can give you my personal view on this.
Yeah.
I think this is middle class in this country, the people who watch your channel, I'm talking to you, have a disproportionate influence on policy making because they are vocal, and therefore there's a silent majority out there who don't have a disproportionate influence. Smart politicians know this. At the state level, that is more filtered. But at the central level, reducing or playing around with prices of petrol is not going to make a difference, in my personal view, to the electoral fortunes of any government. Fundamental economic well-being of the mass of population of India will, and the mass of population of India is not being impacted by this rise in fuel prices. It is not of that magnitude where the transmission effects are large, and therefore I do not think there are high political costs to this. Speaking as an economist, very limited knowledge of politics, but I trust my politicians. They are smart, and I think they have factored this into account, which is why you're seeing them stand firm. And I think it's absolutely the right thing to do.
Okay, so your perspective is that this is not something that's hurting people in a big way. Can I ask you what the government is then doing with the tax that it is collecting on this fuel?
Your viewers are not going to like this. I didn't say that. It's going to hurt some people.
Some people. But you're saying the magnitude is not as big as okay, that's your view.
Absolutely.
Many people may disagree with that, but
I'm sure they will. All the people who take planes from Bombay to Delhi, but I don't speak for them. I speak for the country. And most people in this country don't take planes from Bombay.
There are lots of people who don't take planes who are still affected by it.
Lots of people don't. A minority of this country does. Because we are a large country, the numbers are large. But it's by no means lots of people amongst 1.2 billion. No way.
So what's going to happen with this money that the government, that the centre in particular, let me ask you about the centre. What's happening with this money that's being collected from these taxes, from these fuel taxes?
This money is being used to make sure that we keep our fiscal macros in equilibrium and perhaps prepare, if there are contingent effects of this, say on the prices, as you were saying, of transportation of mass commodities, then we perhaps have to look at the margin on how that can be alleviated, consistent with macro stability. So that's what's going to happen to the money. It isn't all that much, Nidhi, at the central level. The marginal increase is relatively small, and it will be basically used to make sure that spending programs of government, which are pro-poor in nature, are protected. And that
so that's where the money is going. So
yeah.
One final question is, and this is something one often wonders. See, right now oil prices are high.
Yes.
Okay, so that's going to have an effect on our fuel prices as well.
Yes.
But when oil prices were low internationally, we did not have the benefits of that in India. We still had high fuel prices here. In fact, taxes I think have been raised some 9 times by the centre in the last 4 years. So when is the Indian consumer now never going to benefit? When it comes to fuel prices, why were fuel prices still high when crude oil was low?
That's a very good question, and that depends on your point of view. If you take my point of view, which is that the incremental demand for fuel in this country is coming from people who own cars and fly in planes, I do not think these are priority areas. And so it's rather a good thing, since all of it is important, it affects my balance of payments, to conserve my scarce dollars to import dal when I need it when there's a crop failure.
But is that, I again ask you, is that an elitist argument when there are plenty of people out there who depend on transport? Or are you saying that there is a sort of a skewed view of this in Delhi?
There's a skewed view of this amongst the middle classes. I'm going to be very unpopular with your people.
Yeah.
Across the country. Across the country, I know. There's a skewed view of this because it is hurting them. I don't empathize, I sympathize. And what I'm trying to explain to them is if you take the view of the national interest, then what is hurting for them is definitely what we economists call discretionary consumption, which is why they are still using their cars to go to the malls. It's not just work, go to the malls, they're full. You know, go to the airport, it's full. I don't see people cutting down on holidays. I don't see people cutting down on trips to the mall. And therefore, yes, it is more expensive, but it is not unaffordable for them. It's a bit like, you know, if you and I have a healthcare emergency and we go to Max Hospital or Fortis Hospital or something, it is expensive for us, but it is not unaffordable. So my job in the national interest is to focus on what is unaffordable for the people of India, the common people. And if that means trading off what is expensive for those fortunate enough to have cars and take planes from Delhi to Bombay, even if it's Indigo, heck, I know where I'll make that trade-off. But that's speaking for myself.
All right. Well, thank you for being honest about that. And final question. Does that mean that we can't expect fuel prices to come down in the near future?
It depends on whether, if the government buys my argument and many others make the same argument, then no. No. But there are plenty of others who disagree with me.
That's the honest answer.
Yes, and there are plenty of others who disagree with me. But my own feeling is this is not a national priority, just as I believe, contrary to many others, that increasing the fact that civil aviation in India is the largest growing civil aviation market in the world is not a national priority. I don't celebrate it. I'd rather see agriculture, textiles, health, education growing at the rate civil aviation is growing. I think something is structurally wrong there, but that's another conversation.
Rathin Roy, thank you very much for joining us tonight. Very interesting perspective there from you on fuel prices as well as the rupee. Thanks a lot for joining us. And that's it. Thanks very much for joining us.